blockchain is a ledger, and the term ledgers came from the accounting side of the business of managing a business. As I read through this, it was really good. It says, blockchain is fundamentally an accounting system, an accounting technology, it says. And this paper will describe the technology and its likely impact on business, and in particular, the accounting profession. And I thought, wow, that is really quite a statement for the accounting people in our midst, those nerds that sit at a desk and count beans all day long. Here we have a system, and what they've basically said here is the key features of blockchain fit what accountants think is just perfect life. First, propagation. There are many copies of blockchain ledger, so no master copy. Now, what they would like the most is the fact that they can put it in several places so it doesn't get lost. Accountants don't like to lose things, especially money. So all participants have access to a full copy of the ledger, and all copies are identical and equivalent. So whether you're talking about pieces of a company that are disparate, and let's say that you've got a headquarters in the US and a satellite office in Ireland or Scotland or Europe or Africa, anywhere, everyone has a full, complete copy of that ledger. And if accountants love that, they've got a quick and easy access to the data. Once updates are made, no one party has control of the ledger. New transactions can be posted quickly, and they propagate out to all the residents. So if my satellite office in Ireland posts a transaction because they did some business, it posts immediately to their ledger and then propagates to the rest of the world. Okay, permanence. We've talked about the immutability of a blockchain that is constantly being added to with cryptography to make sure that each block that's put together is never tampered with. And once you have one block after another, you end up with a situation where all of these blocks become immutable because you have to literally go and change. If you change the data in one block, you've got to then recalculate all the cryptography and the Merkle trees and all that information for each connecting block going forward. After a while, that just becomes impossible. We don't have computers that can do that. And we don't have computers that, if you've got 100 copies of it spread around the world, that can make sure that all of their changes propagate quickly to all of the other locations before the nefarious act gets caught. So, permanence. Past transactions cannot be edited without the consent of the majority, meaning that the blockchain records are permanent. In other words, if somebody wanted to change it, you'd have to get permission of the majority, and the majority will say, wait a minute, we're not supposed to be changing accounting things. I get questions all the time. Well, can we go back and change actuals? Wait a minute, actuals are actuals. If you spent the money, you spent the money. Oh, but it wasn't quite right. What do you mean it wasn't quite right? You spent $5. You spent it on that day. That should stay that way and be permanent. Okay, the entire ledger is stored by each participant and now can be inspected and verified. The issue with permanence is the situation where, an Enron type of entity that did those horrible accounting tricks to make sure that they were never discovered before they went bankrupt. In other words, all of the corrupt executives sold off all their stock while convincing everybody else that the company was totally viable, and convincing Wall Street that they were just the beautifully run company that always made profits. And when the house of cards started falling, all the executives had already sold their stock and taken all the profits and left all of the company, the people in the company holding the bag, because they had also convinced all the company that you gotta buy our stock. So everybody's 401k, everybody's retirement funds were all bought into the stock as well. And it's those kind of accounting tricks that accountants really, really like to have permanent on a blockchain, so you can see all those transactions that happen. So the next thing is programmability. Some blockchains allow for program code. Well, not some, all do, to be stored on them. In other words, smart contracts, as well as the ledger entries, automatic journal entries that can execute automatically when triggered. There's those smart contracts. So the smart contracts, I mean, I work at Boeing, and Boeing is huge. We did over 60 billion last year, and last year for almost half the year we didn't deliver any 787s, and we just barely started getting our 737s started being delivered, but we still did $60 billion worth of business. Now, that's not the biggest company in the world by any stretch, but we've got $60 billion flowing through our coffers, income coming in, expenses going out. And for the government, especially, in our military side of the business, the government needs to know how much money was spent on the widgets that they buy. And they want to come and audit that all the time. Well, those smart contracts could be employed to do all the processing that happens every single night in our current accounting system. Now, our current accounting system is a relational database underlying that, but that accounting system has to push the dollars and into the various accounts during the night. In other words, something is expensed and it goes to this particular contract, or an employee in the payroll comes in and payroll is paid out, but certain pieces of all that payroll have to be pushed to their various different contracts. And all of those contracts need to be able to show the proper expenses at the end of the day when the government wants to come audit it. And frankly, for the business commercial side, the Boeing commercial airplanes, on that side, they still need to have all of the dollars in the appropriate places for the 787 to show whether it's profitable, or the 767 or whatever plane is profitable. So all of that programmability in the smart contracts would enable very, very quickly, microtransactions that could be done during the day instead of all being done overnight, which would be an incredible benefit, because our systems just crank and crank and crank, and we have to keep optimizing them, because as we get to be a bigger and bigger company, we tend to start outgrowing the software that we have put in place. And the smart contracts being able to grow with and do those microtransactions would be a huge, huge benefit. So would blockchain benefit the accounting structure within a company? Absolutely. It would simplify my task in building finance systems a lot, and it would easily be able to benefit all of the business intelligence systems that have to pull data from it. Much cleaner data coming from that kind of a system than from the relational systems that people tinker and toy with, constantly readjusting journal entries and readjusting all the information underlying. It's kind of like trying to pick up Jell-O in your hand and toss it somewhere. It's just terrible sometimes to try to nail down exactly what happened. So I hope you enjoyed this explanation, and we could probably move on to our next subject.
I did want to comment that your Enron example is now a 20-year-old example.
Oh gosh, are you trying to remind me again that some of my students weren't even born then?